NASDAQ outperforming today following that cooler CPI report. Tech's been shaky lately, leaving many to wonder whether the recent volatility is here to stay and what that might mean for deal making and IPOs in the space. Let's ask Ashley MacNeill, head of equity capital markets at Vista Equity Partners. Nice to see you again. Welcome back.
You too.
All right. It's been volatile, as we said. You're not surprised by any of this, are you?
No. 2025 is going to be predictably volatile. I think it's something we can anticipate. We saw last year a lot of the valuations being pulled forward, a lot of momentum, and a lot of the macro decisions that are set to be made this year. So it's going to be a volatile year, but I also think it's going to be a very exciting year.
Why so?
I think software is really at an inflection point with respect to generative AI being integrated into the financial metrics. And I think you're going to start seeing, I know we've talked about proof points, but I think you're going to actually see real data, particularly on the top line, on the revenue growth. And so you're going to see, I think, very interesting data come out of earnings on the growth side.
Is it easy to tell the positive story around software when everybody seems obsessed and fixated over chips and semis?
Look, I don't think it's an either or. I think it's an and. And so it's really where along the generative AI arc are you investing? I ultimately think that software is the beneficiary. I do think that there is a first mover advantage. And I think that software companies that have domain and sovereignty over their data set are really going to be the winners here. So yeah, it's easy to be positive about all of these tailwinds.
The trade's been interesting. If you back it up, I don't know, 5-6 months, you had this real outperformance, right? Software versus semis. And maybe more recently, software stocks have taken a little bit of a turn lower. Why do you think that is?
Well, last year, between sort of the time period of May to, say, August, software wasn't the most beloved sector. And that was really because of the impatience by investors to start seeing proof points around this generative AI. Look, generative AI implementation is going to be a multi-year cycle. This is not going to happen overnight. This is change that requires a fair amount of patience. And software is just starting to really start standardizing the metrics that we need to look for to understand how this technology is going to change our everyday lives.
So when you say you're not surprised by the volatility and your outlook suggests that it's going to continue, I don't want to assume everybody knows what your specialty is, but you guys are software experts,
yes,
right? That's what you do. So how does that increased volatility and expectation of more impact what the end game is going to be for the companies that you have, whether it's deals or IPOs or even beyond your firm, just the space in general?
It's really about being okay and embracing the volatility that we're likely going to see in the public markets. Software is a very durable business model, and it's shown over the past couple of years that it really can withstand a lot of the macro dynamics that are going to be at play, as well as what may or may not happen with the incoming administration. And so it's more about understanding that there are going to be certain implementations that take time, and then understanding what you're looking for from a data perspective to know, are these changes working?
When you see rates backing up the way they have,
yep,
what's your reaction with the kind of companies that you watch?
It's really more about understanding the cost of capital for software companies. The cheaper the cost of capital, the easier it is for these companies to implement innovation and to be willing to take risks with respect to their businesses and their product lines. And so I think rates backing up means that there's likely a cheaper cost of capital, and that is good for innovation.
So we mean rates coming down from the boil. Because when the Fed started cutting rates in September, you see rates just going straight up, from up and to the right. And you're sitting there saying, well, this is the last thing that we need at this particular time, right? We need the rates to start coming down. Maybe that's the relief you're talking about today.
Yes, but what I'm more focused on is access to capital and dry powder and making sure that we're still seeing capital being deployed in the equity markets. Last year we had a record year of inflows for equities. I anticipate that will continue. And so it's really about making sure that software companies have access to capital to continue to innovate and to continue to provide these really unique products to us.